Hey everybody, welcome back. Our next speaker is Kamran from Infratech Capital, and he'll be speaking about technology and blockchains transforming the global infrastructure market. Please welcome Kamran.
Thank you very much. Everyone can hear me? All good? Okay. Do we have the presentation? Sorry? No, there is one. Oh, I just did it yesterday. There was one from yesterday. Oh, geez. I'm so sorry.
ICO Compliance?
While they're getting that worked out, have a quick announcement for everybody. There are booths in the lounge area left of the restaurant. There's networking opportunities there for coffee and tea and 12 unique vendors, so remember to visit them every opportunity you get. Thanks.
We're good?
Your clicker's right there.
Okay. All right. Thank you very much. Let me just put it on. Okay, here we go. So I'm going to talk to you about what's happening in the global infrastructure market. And when I say infrastructure, I'm not talking about internet infrastructure. I'm talking about actual roads, ports, airports, water supply, things of that nature. Before I go any further, important for you to know this is not a solicitation. This is just a description of what we're trying to do. I want to make sure that you take account of that. Here's what's happening in infrastructure. So before I start, let me use an example which seems to work very well. For a lot of people who have lived in developing countries or live there now, you would know that as early as almost 10 years ago, if you wanted to get a fixed phone line connection in your house, it required about 10 years to 15 years to get that approved. So you put in the application and you wait and you wait and you wait. And the reason for that was that the process for getting any kind of expansion of infrastructure grid was entirely and absolutely controlled through the public sector. So the country you lived in had to first get a loan from a World Bank or Asian Development Bank or African Development Bank or some other organization like that. Then the planning department had to figure out where the expansion will take place. You had to be lucky enough to be living in a city where they were expanding. Then you had to be lucky enough to be in the district where they were expanding. And then you had to pay some guy on the side here and there to make sure that your house was on the network expansion plan. That's how you got your phone connection. I'm talking just fixed phone line connection. And it literally took that long. And then we had the mobile phone development, which completely shattered that model. So the government no longer had to ask anybody outside to raise money to take a loan. The government did not have to play the role of organizing the project, structuring it, figuring out where the expansion would be. And most importantly, the consumers, people who actually use the service, had finally a choice. They could pick between, as we do now, AT&T versus Sprint versus T-Mobile. And they could pick the package they wanted. And it completely took the government out of the picture. Now you have a much more efficient, fast process. And this is the reason why if you go to a developing country and you look at how much people spend on telephony, just their phone, and I'm not even talking yet about smartphone, the value that creates, just phone, they spend a disproportionately high amount of their real income on phones because it gives them value, right? Now, it would not surprise you to know that the same thing is now happening in the energy sector. There are millions, hundreds of millions of places that do not have electricity, not because they can't afford it, but because we as a society have not figured out the right models to actually service them in a proper way, to offer them a product that they can pay for. So this is the shame of our time today. When we talk about infrastructure and we say, why, you know, at every G20 meeting, every big meeting of leaders, when they talk about economic growth around the world, the number one issue is we need more infrastructure because lack of infrastructure is choking growth. But the models we have right now, up to now, have not been organized enough. They did not have the right structure to actually expand infrastructure. Now, I say this, you'll see my bio in a minute. I was advisor to G20. I have invested about $10 billion in infrastructure projects in my career. My partners, if you combine all of us, we have about 80 years of doing this work at the World Bank, at a variety of different organizations, in public sector, in private sector. So we used to advise governments on how to prepare projects, how to structure deals, and how to get private capital. And we've done that. We've done a number of very critical benchmark transactions. But when we decided to do this new venture, we thought, okay, how are we going to have impact? How do you scale that up? You spend 3-4 years doing one deal, and then what? Then you spend another 3-4 years doing one more deal. So in my lifetime, I thought, how many deals would I do? Another maybe 10-15 deals, and how would that change the world? So we thought, okay, what is it? How do we actually change the system? So there are two key things I want to talk to you about that are central to what we're trying to do. We are setting up a private equity fund for infrastructure, which deals with two important elements: how infrastructure is provided, which is the technology that is being used for infrastructure, and then how infrastructure is financed, which is just as important. And you will see how blockchains play a role in that. Now here's the situation right now in infrastructure: massive growth, massive need for infrastructure, trillions of dollars invested every year in infrastructure in all the markets, but Asia, by far the biggest market where they are investing. Unlike us, you know, we're still talking about investing in infrastructure in this country. In Asia, they have been spending, they have been investing. But they still need to invest more, and they need to invest much more efficiently involving the private sector. Here's what's happening on the financing of infrastructure. So if I was an infrastructure service provider, let's say I am a energy company, and I wanted to expand my network to, let's say, this community, and you all live here. The process right now is I would go to a bank, I either take loan from a bank, or I issue a bond, or I get some kind of grant from the government or World Bank or some other organization. Usually it's a combination of all three. But for each step, if I go to a bank, the bank will say, oh, I can make you a loan. I see that you have consumers here. This is a community that needs more energy because they have manufacturing facility and the right current energy does not provide the right voltage to run a manufacturing facility. Or they're just consumers in their households who need electricity. But you can't raise all this money on your own, so I need a guarantee from the government. So the first thing they will say, I'll give you a loan, I need a guarantee from the government. When you issue a bond, same thing. Bond will be fine, the investment bank will say, but we need a guarantee from the government somehow. So what blockchains do, as you all have probably been learning, what they do very, very critically is that they have the ability to take out the middleman. So if you are my consumers, you're my customers, you have the ability to pay me for the service I'm going to provide, and I'm the provider. Well, you know what? Why don't I just issue a token and deal with you and others like you directly? Even third parties who will say, if these guys don't buy, others will buy. So I can go directly to the source. I no longer need the government's guarantee. I still need a license, mind you. I'm not saying the government's role is completely finished. The government will still have to give me a license to operate and make sure that I'm not defrauding people and all that. But government does not have to be directly involved in the financing. And by the way, this is a plus for the government too. So every finance minister you talk to, and like I said, I used to advise all these finance ministers, number one issue for them is they don't like to provide guarantee, because then it becomes a liability of the central government or the state government or whatever the case may be. And this is now starting to happen. Number of infrastructure companies are now basically saying, to heck with this government process that takes 4 or 5 years, and then once the government is involved, they make my life miserable, the transaction cost becomes high, and the quality of service, and frankly, corruption comes into play. So a number of infrastructure service providers are now going down this track of incorporating blockchains in their model, where there's a smart contract between a consumer and a provider. I provide you electricity, boom, I get paid immediately. There's no issue of like, oh, I bill, they're not paying me, therefore I need the government to force them to pay me. All of that goes away. And there are some examples I'll show you of companies that are already coming out in the market. There's one, if you wanted to see, Power Grid, that's coming out of Australia, that's backed by the Virgin guy, what's his name, Bronson, is backing it. There's the Hyperloop, they're going to issue tokens. So there are a number of very serious players out there who are looking at infrastructure because, again, where is the most bureaucracy? Where's the most inaptitude in the infrastructure market? So this is where the disruption is going to be the hugest. This is where the value creation is going to be the most massive. And the one thing I wanted to just point out here is that when we think about blockchains and we think about tokenized economy, infrastructure is actually the most appropriate area for tokens. I mean, think about it. We use the word utility token. That's an infrastructure term. That's why it's called utility token. So what you have are very clearly defined cash flows, which is what our bills usually are, water bill, whatever. It's fairly easy to figure out what an average bill is going to be for each consumer per month. They are long-term contracts, right, which is very, very useful for a token. And the insubstitutability of the provider is very high. So once you become my consumer, it's not easy for you to switch a gas company or an electric company. So it's designed perhaps more squarely for infrastructure, this blockchain concept, than any other market. Okay, so this is how I talked to you earlier about the technology disrupting, which defines how we provide infrastructure. And now I've just explained to you blockchains changing the way we finance infrastructure. Here's the fund we are setting up. It's a multi-currency fund. We expect to issue multiple funds, but it's the first one. And I'll tell you it's how we're setting. So it's multi-currency. We will take fiat as well as variety of different cryptocurrencies. We will have relationships with various exchanges. And it will make two types of investments. One, investments in equity of technology startups that are developing platforms for the infrastructure market. So it's almost like a venture capital thing. Many of these investments will be in fiat. So we have a whole structure where we're taking fiat and cryptocurrency, and then we are investing in fiat and cryptocurrency. So it's a balanced investment model where you're not 100% relying upon cryptocurrency, and you're not 100% on fiat. The other side is, the other investment is in infrastructure service providers who will be issuing tokens. So let me ask you this question. Right now, when an ICO comes to the market, how many people who look at that ICO actually know the business in which the ICO will operate? So right now, the due diligence that's done is done on the marketing. Okay, they have a very nice, white paper. The team looks pretty good, and the advisors are known names. That's it. That's the extent of the due diligence that's done. What we're setting up is a fund management system for people who recognize that infrastructure is where a lot of value is going to come. They want to play in that market, but they say, we need people who know infrastructure to manage our money. So that's what this is. We will know the underlying business for these infrastructure companies. We will see whether they actually have the skill set to actually deliver. We will know whether they have the right relationships, and we can actually help them establish those relationships so that we will be in a position to actually value the token. Right now, one of the things I've been very interested to note as I enter this ICO market, there's almost never a discussion whether a token is priced right. People make the decision, do I buy it or do I not buy it? But there are no analysts looking at it and saying, you know what, this token is not $1, it should be 50 cents or it should be whatever. People just say, I like it, I don't like it. So what we hope to do is set the benchmark. So let's say there's an infrastructure company's token that comes out, it's price X. We may not buy a huge big chunk of that. We may only buy 2 or 3%. But we, because of our domain knowledge and our expertise, will set the benchmark on whether this is a good token or not. And we believe that we have the wherewithal to be able to establish that standard. So then others, general investors like you and some bigger investors will say, okay, the guys who know infrastructure are in this deal. They must have done the due diligence. So that's what we are trying to set up early on. As you can see, so 2 investments, multi-currency, and then I'll tell you a little bit more detail about the fund. This is me and my team. As you can see, I'm not going to repeat all of this, but we have tremendous amount of experience in the market. We have very good connections. We have advised governments. We know the ecosystem within which infrastructure projects are developed, executed, financed. We've done public-private deals. We've done everything you can imagine. And we have a very, very strong platform on technology, especially in Silicon Valley. This is our experience worldwide in terms of the deals we have done in our careers. Here's a description of how we've put in place the methodology for how we will actually review deals. This is for the infratech equity. So when we make equity investments, these are it's just a summary of our framework. So this is our investment methodology, how we will process a deal and how we will make the decision. Here's a similar thing for infrastructure blockchains. So what process we will follow for each transaction to make sure that there is a thought-through analytical process for making investments in these ICOs. Here is a list of the technology companies that we are talking to. This is our pipeline of tech deals, all Silicon Valley. And you can see, one thing I can tell you, they're all A-round investing stage. So that means they already have cash flows. The proof of concept is in place. And one thing that I insist on is that they have very, very well-established VCs already invested. So I always say that I'm the grandparent, I'm not the parent. I will help a company grow in Asia and elsewhere, but I need to have a parent in the company already who is managing cash flows and making sure that the company is managed well. I'm about growth. So all of these companies already have very well-established VCs, and then you may ask me, okay, if very established VCs are in, why are you getting a chance to invest in a company like that? And the reason for that is that right now the mantra in Silicon Valley is, if you are not global as a company, as a startup, at a very early stage, you will never be what is called a unicorn, a billion-dollar company. That doesn't mean if you're global, you're guaranteed to be a billion-dollar company. But what they say is if you're not global at the very early stage, then at each round of financing, people assume that you can never be up here. So the curve is always lower for you if you're not global. So every company in Silicon Valley right now wants to become global at a very early stage, certainly by A-round financing. What we offer them is a way to go global, particularly in Asia, which all of these guys want. And if they're building a technology for infrastructure, you know for sure they want to be in Asia very, very quickly. So that's how we get invited, often by the VCs themselves, and some obviously by the companies. Here's a sort of brief list of some of the companies that are coming out now. These are infrastructure blockchain models. You can see we're going power, water, all kinds of things. Very soon you will see even a variety of airport services, logistics services, all kinds of things are now moving down towards the blockchain model. This is what will drive the real growth of blockchains. I can say that with very strong confidence because we're committing our career and all our savings into this model, knowing this industry for 20 years. Here's the structure for the fund that we are putting in place. As I said, the first fund is going to be very small because we want to make sure this is, first of all, I should point out, this is a security token. So if you raise $75 million, the tokens we issue will be exactly equivalent to $75 million, almost like a stock. So the tokens will not float separately from the value of the fund. So if you, let me give you an example, a very simple one. So let's say we issue 75 million tokens, $1 each, we have $75 million in capital. So each one of the token holders will own proportional amount of the value of the fund. Very, very simple, almost like a pure private equity fund, except you will have the liquidity to sell your token anytime you want, right? Okay. So the idea was to raise a small fund, just 75 million, so that the tokens will trade well above the par value of the token, so that there will be liquidity and all the investors will feel comfortable that there's value being created, right? We're looking at, so I want to clarify the investment side. So investments here, this is not about us taking capital into the fund. This is about how the fund will invest its capital. So on the equity investments, there will be about 1 to 2 million in the first round and 2 to 3. And the ICOs, those numbers will be higher. You can see the IRR expected and so on. We're looking to fundraise globally. So we'll be raising capital in EU. So we'll register with the FCA. We're going to raise capital in Asia, and we will also raise capital here in the US under the SEC's particular regulation called Regulation D. Just a summary of everything. Company is incorporated in Singapore. That's our expertise, and then I think talked enough about what the value is of the fund. And that's it. Thank you very much. Happy to take questions if we have any time. I can give you my card. We are going through the whole legal process and so on. That's why I put the disclaimer. We're going to set up 2-3 funds in years to come, and it's a security token, and this is not a fly-by-night operation, so we're doing it in a very, very systematic way. Yes? The timeline right now is looking like we expect to finish all of this by the summer. So we're literally in the process of finalizing lawyers in the 3 jurisdictions. Very complicated process. Accountants we almost have in place, so we'll have separate accounting firm for corporate accounting and one for tax accounting. So we're trying to be very, very systematic and organized about it. And we have very good funders at the GP level, at the general partnership level from the founder side. So we have plenty of capital to actually structure it right. Yes, sir. Yeah, very good question. I want to clarify, this is not an impact fund. this is a for-profit endeavor. Part of the value of an investor giving us money to manage is for us to do the due diligence to make money. This is to make money and move the infrastructure market in the blockchain way, meaning to make it more efficient, which we believe that if people make money, they'll also provide better service to the consumers. Because we come at it after 20 years of doing this, we come at it from a perspective that it is a shame that so many millions of people out there have the ability to pay, but we are not able to provide the service to them. So we're trying to provide a service for a pay. So to answer your question, if there's a war-torn situation, you will not find me there investing. I may do it out of my personal, I do a lot of pro bono work, which is separate, but I'm not going to take my investors' money and put it in that. And if there is a political issue in a country or political issue with a company that they don't have a very good relationship in a particular country, that's what we will know. Because we know the countries, we know the setup and the ecosystem, so we can, sniff that out a lot faster. Yes, sir. Sorry? Yes. So let me answer on two sides, two types of investments. On the equity side, it's very, very simple. If you find the right tech company that is going to allow you to come in and invest at the A round, we can expand their revenues quite significantly as we take them into Asia, for example. Right? So there's on the VC side, you have to find the right company, the right team, the right technology, and then you can, on top of that, add a little sweetener in that you know that you can help them land sales in Asia. Not the project. This is about investing in the company's equity, right? So there's a startup, let's say there's a solar company out of Silicon Valley, okay? Which we happen to have one, right? Top of the line solar technology. They know solar very well, but imagine them trying to talk to the electric utility in Indonesia about buying their product. They don't have a clue. So that's why they invite us. So we invest in that company knowing that this technology can be used in a lot of markets that we know well, and we can get them sales. That's the equity side. On the tokens, on the infrastructure providers issuing tokens and us buying those tokens, two elements to that. One is a number of these companies who want to issue tokens are not sure how to do it. So we'll be involved in advising them on how to issue, but we're not consultants. So the way we will make money is we will help you, we'll help you set up the contacts, we'll help you get this through the governments even, but we will buy your first 20% of the tokens at a deep discount, right? So that's, sorry, we've run out of time. I'll be here, so if there are more questions, I'm happy to answer. Okay? Thank you very much.
Kamran Khan from Infratech Capital.